Hello, in this video we'll be talking through the trades taken in the wheat futures on the week ending October 18th, 2013. This was the last week of the government shutdown and the week in which the government was going to go into default but didn't. So that puts it into context. It has been about a 3-week period of very choppy trading, and I just want to show you this last week in wheat, how we survived, and also illustrate some of the features that we've talked about in earlier videos about having a circuit breaker in place and using a dynamic profit-taking strategy. So this is wheat trading, and we're using a trending system. This is the 7 Summits Trader system developed by NetPicks. But that's not what's important. What's important is it's a trending system, meaning it's very susceptible to chop. But we use a couple of strategies to reduce that. And unfortunately, we can never eliminate chop. The week before this one, we actually had about a $600 loss for the week. And other weeks we've been very profitable. So in the long run, this has been a terrific trade plan. But the features I want to highlight here is this trade plan, the way we've been trading it. We actually are looking at a fairly small window from 9:30 to 10 o'clock exchange time. And exchange time for wheat is Central Time. So that would be 10:30 to 11 o'clock New York time. By limiting our trading time, obviously we have fewer chances of catching trades. On the flip side, however, if markets are very choppy, we're not going to be in the market for a long time. So if we are damaged, we're not damaged too much. We're also using the dynamic profit-taking strategy that we call power of quitting. And power of quitting essentially says, if you have 2 winning trades and you have a net positive result, stop trading. Now, you could have different flavors of power of quitting. It could be 1 win and positive and so forth. But the scenario limits the amount of time you're in the market and takes advantage of the fact that you're going to be trading the best times for this instrument. And thereby you're going to get your wins early and you're going to step out before things get choppy. We also have a variant of the power of quitting, and that's called one and done. And I believe we have an example at the end of the week that we're going to highlight. So with that in mind, we start out on Monday here. This is Monday, October 14th. And you'll notice there's a couple of arrows I put here for illustration. These would have been the trades that we would have taken had we started trading wheat at 9:30 New York time, which is the same time that the equity markets open. And obviously it would have given us 2 losing trades, which would have not been very helpful, obviously. But by waiting until 9:30 exchange time, which happened right about there. That's 9:32 exchange time, 10:32 New York time. By waiting until that time, notice we had no trades. And by the time 10 o'clock or 11 o'clock New York time came around, there were no setups, there were no trades, there was no activity. Now you might say, oh, but that's a failure of the system. Well, not really. What it's telling you is the system kept you out of the market when it was extremely choppy. So you avoided taking any losses. Right? And a day with no trades can be a win compared to a day with losing trades. So moving on to Tuesday. Now Tuesday, had we started with an earlier start, we had an opportunity here. This is what we could have considered a get in sync trade. It's this short right here. It's set up pretty early in the morning, but we could have gotten in sync with it at 9:30, right around here. Had we done so, unfortunately, we would have stopped out of the trade. and we would have had another losing trade. Another setup came here. This one did work out. So we missed out on a loser and on a winner in this case. But our start time comes, like I said, at 9:30. So this bar closed at 9:38. It gave us a setup. We triggered short. Didn't quite get to our full target, which was down here at 685.5. However, we did stop out with one tick. So essentially a break-even trade. And there were no more trades. So for this session on Tuesday, we got 2 ticks. Again, nothing to write home about, nothing to be proud about, but we don't have a loss. We now move on to the Wednesday. And remember, this is a very simple trade plan. We're only in the market for half an hour, and we get out early if things go in our favor. Now, on Wednesday, we had another get in sync scenario here. There was an early setup, which we could have gotten in sync with later on, right here at 9:43 New York time, 8:43 exchange time. It would have been a losing trade. We also missed a very nice winning trade, and this came at 9:45, 9:44 New York time. This does happen. You can miss out both on losing trades and on winning trades, but we're okay with that because what we do is we stick with our trade plan, we follow our trade plan, and we know that in the long run our trade plan is profitable. Now there might have been an opportunity to get in sync, but you'll notice right about 10:10 New York time we had this big move down. Things could have gone differently. Had we had a pullback, we might have gotten on board the short trade, but it didn't happen, and there were no more trades before 11 o'clock New York time. So far for the week, we've had Monday, no trade activity. Tuesday, we only had one trade, and it was good for 2 ticks. Wednesday, no trade activity. And now we move into Thursday. So Thursday, an early start would have given us this trade right here, which was good for 1 tick. And eventually we got this trade exactly at 10:30. We triggered into it. You can see we reached our fixed target here. And we got a small profit on our trailing position. In total on Wednesday, we made 11 ticks. So that's 13 ticks so far for the week. And that leaves us with Friday. Now, at this stage in the week, the government shutdown and debt ceiling debate had been settled, an agreement had been reached, and markets were resuming more normal activity. And you can see that, not nearly as choppy as it had been earlier. But we finally move into the Friday session, and with our very simple strategy, so let's take a look at what happened early on. Had we started trading early at 9:30, there was a trade here we would have gotten in sync with later on. We would have triggered into it right on this bar. That would have reversed, and the reversal got out with 1 tick. So no big deal. But we finally got our payoff on Friday with this setup here. And this came at, you can see 9:46 exchange time, so 10:46 New York time. We got this long setup, and this really marked the beginning of a nice breakout move. These yellow dashes here you see, that's our trailing stop. And notice our trailing stop actually moved beyond our fixed target. The fixed target was this line right here. Let me just highlight that. This was our fixed target. And oops, there we go. And as you can see, the trailing stop moved well beyond that. Whenever we see that happen, we declare that a one and done. That's one of those larger than average, much larger than average trades. And after we get one of these, instead of pushing our luck and looking for more trades, we stop. And it's a good thing we stop because the very next trade would have been a losing trade also. So we had the one and done, gave us 28 ticks. This next trade came at 9:52. So normally, if we were pursuing our power of quitting, we would have taken it. This was still before 10 o'clock exchange, 11 o'clock New York time. We would have taken it and we would have stopped out. It would have reduced our win for the session. So the one and done strategy, locking in gains after you've had a trade that is much larger than usual, and it has to be the first trade of your session, it avoided that. So net, by the end of the week, we were up 40 ticks, and that's roughly $512.50. Well, exactly. And this is using a very simple trade plan. We're in the market half an hour each day. We had, out of the 5 days, we had 2 days with no activity, 1 day with basically a 2-tick break-even trade, and really 2 good days. And that's all it took. $500 for the week. You can trade wheat with a relatively small account, depending on the margin required by your broker, but you could trade this with a $10,000 account. So for the week, you're up a couple of percentage points here, 5 percentage points for the week. So nothing to sneeze about. All right. So thank you for your attention, and we'll see you next time. Bye-bye.